are reading Rich Dad's Guide to Investment, and I have no idea what chapters we were going over. I just read for about 2 hours.
So 37 to 40, I didn't text it. I sent it via email. So
can you add me to your email list, please?
Yes. What is your email?
I'll message it.
Perfect. So
we were supposed to read what through what?
So 37 to 40. And
I got to 39.
Sweet, awesome. Good enough. So we'll kind of go through so basically 37's how a sophisticated investor thinks. This one's really kind of already been kind of driven pretty well. So by the time we got to this chapter, it almost feels like he's repeating himself. But he starts to get to analyzing investments. And he talks about the actual ultimate investor. And then the chapter after that actually is, are you the next billionaire? And so the reason I kind of broke out this section is because, what's that? Oh, I didn't. Okay. So the reason I kind of broke it out like this is because he really kind of talks about analyzing businesses and essentially selling businesses and your exit strategies. And so analyzing investments, he goes through a few different ratios, and he essentially says, like, the numbers tell a story. So for instance, the gross margin percentage, that'll let you know, how much money are you making off of your revenue? Are you having to do returns? Are you spending too much on cost of goods? Net operating margin will just let you know if you're taking those gross margins and just spending it. Then you've got your operating leverage, which your financial leverage, which kind of tells you a little bit more about how you have the company structured. And then you kind of get into debt to equity, total leverage, and then return on equity, which is more kind of about, how are you benefiting on your equity? And then he talks about quick and current ratios, which is really just, can you pay your bills? Then he talks about due diligence in this chapter as well. Did you guys get to this chapter? And I guess, is there anything new that you kind of learned here? Because I know for due diligence, you guys know them pretty well. But what kind of stuck out in this chapter for you guys?
Now, I don't know if it was in this chapter or like in this area. I know when he was talking about buying a house or buying rental properties or whatever, it was a good reminder. If you're buying a rental property and it costs you $100 a month after the cash flow, then you only have a limited number you can get. But if you're buying a rental property and cash flow is $100 a month, then there's no limit to what you can do, as long as you can figure out how to stack it. And that's an important thing for me to remember, especially with my rental property. My rental property, it goes up, it goes down. Sometimes I'm really pissed off at it. Sometimes I'm glad I did it, but even if I'm pissed off at it, I'm glad I did it. But then sometimes I'm like, what the hell was I thinking? But again, I think in 3 or 4 years when we go to sell it, we're going to be very happy we did it. But right now it's not cash flowing, at all. It's basically breaking even, if not losing a little bit. But at the same time, I look at it as I'm putting an investment into long term. But at the same time, I want to cash flow. But it's an important thing to remember, like if you're getting into rentals, and just be careful of your money. I'm getting kind of lost at the end of the book. This is why I tried reading it once and I didn't make it. And this time, I'm just being dragged over the finish line with it this time. But it was starting getting ratios and stuff. And I'm just like, all right, that's all right, Kiyosaki. I'm almost ready to tap out.
So I'm glad that you say that, because I feel the same way. As I was listening, I was sitting on the patio yesterday listening. I did not get I was going to listen to everything on the drive home from Alabama on Sunday, and David, you haven't heard, but I picked up a hitchhiker, and it's quite the story. Natalie, your face. It was a grandma and 2 grandkids. Okay, so it was
how every story begins.
Okay, I can't wait to hear that.
It was relatively safe.
That's another YouTube show for another day.
Now, yes, it's a very, it's kind of a funny comical story. The end is kind of sad, but whatever. So last night I was sitting on the patio downstairs, just kind of enjoying my backyard and listening. And to your point, Steve, I found my brain drifting because a lot of what he was going over was fast, right? How to evaluate these businesses and, what number to subtract from what number and what number to add to what number to figure out if it's, if it's this or if it's that. And then he starts talking about how, certain investors get in trouble because they don't run all the numbers and this and that and this and that. And so for me, it was very confusing. There was a lot of moments where I found myself completely checked out from the book. It's definitely a hard book if you don't speak this language. But he said something in there that made me feel a little bit better as he was going over all of the numbers and all of the formulas. And it was, when you're looking at a business or you're looking at an investment, either understand how to run these numbers or hire someone that does.
Right.
And I think that was the biggest thing that I took away from that. It was like, oh, well, fine. I don't have to feel stupid anymore. I can hire someone that does understand it. And I understand the value of leverage. I appreciate the value of leverage. I use the value of leverage. However, I think there's still areas in my life that I maybe fault myself for still wanting to use leverage or having a need to use leverage. So for me, I think it just gave me permission to use leverage, right? And to find someone who can help me in those situations. I mean, I don't know what I don't know, and I shouldn't feel bad about that. So that was kind of my, not a new takeaway, and I feel like that's kind of the consistent statement that I make every week is I'm not learning new things, but I'm consistently being reminded, one, we need a plan, and two, use leverage. Make these things work, because just because I don't have that data and that knowledge in my brain doesn't mean I can't go invest in a business. I just need to find somebody who does and who can explain it. And at some point I will understand it.
Mm-hmm.
Eating an elephant one bite at a time is the best way to eat it.
Right. Right. So one thing I wanted to mention really quick. So Steve, if you don't mind, I'd like to use you as an example. So your rental property specifically. So
Okay.
this analyzing investments, I know it's kind of complicated, but to Laura's point, the end of that's really important. Finding somebody to kind of like help you like go over that. And so, for instance, with the rental property that you were talking about, so let's just say you systemize everything, you get your BI triangle, and so you're not even really managing the rental anymore. And let's just say you have a few of them. You can actually so he talks about this, the quick and current ratio. You have somebody calculate it for you. And from there, you can tell whether you're making cash or not. So like right now, you already know it because you're in the operation, but you can quickly look at financials, do that and say, okay, well, we're not making any money off of this.
Right.
Think back to when we weren't making it before, what did we do? And you give the team that instruction. And then the same thing with like the equity and financial leverage. To your point, you're benefiting really from the principal pay down, which you would essentially see in those ratios. So as you just look at those financial statements, to you guys' points, as you hire some folks to get them to look through it, they'll tell you all that from the statements. Therefore, you don't have to do as much. You don't have to get into the operations to see if they're not making cash. You don't have to get into the operations to see if they're not leveraging their debt and their equity well. So I think that's the value there. I think what I like about the book is if you have the actual copy, it does a really good job going through them. And it's really more like less so reading it more than just referencing it.
Right.
Because you can come back and these ratios are kind of like the easy ones, the first, like, not easy ones, I'm sorry, the intro ones. And so it's like, they're pretty easy or not easy, sorry. They're simple to go through and kind of pull out from the financial statements as you learn the financial statements. So they're only simple once you learn the financial statements, but I think having it as a guide, I think is huge. Natalie, did you have anything to add?
I had to say, so I'm almost done with the book now, and so it's
Sweet.
actually been maybe a couple weeks since I last read this section of the book. But no, I did have one question for the group though, and I was wondering if any of you guys had purchased the game that he talks about.
I was going to ask that.
Yeah.
It's $89. I have not bought it yet.
Oh,
Yeah, brother's making money, man. You
It
gotta
is.
respect. You gotta respect the hustle,
I
man.
was gonna get it immediately because I was thinking it was like 25, $50, and I was like, oh,
right.
wait a minute, I have to think about this.
Yeah.
Yeah.
Well,
Well,
I was
David and
wondering,
I actually just had this conversation the other day that we should buy it and start playing it.
well, can we play it together?
Right.
Maybe if we all.
Oh, absolutely. I'd be so down. Lexi is not excited about it, so I need some friends to play it.
Well, and that's a good point too. Is like I don't think it's a bad idea for our spouses to play too, because they
Right.
need the same exposure. Because right now we're trying to convince them that this is a good idea, but if they can see it on their own too, that would be nice.
Right. So Laura, I know you didn't get into chapter 40 as much, but I might give you some spoilers. So one thing I kind of wanted to ask you guys, so he actually talks through, he has like a friend of his that he talks about, Larry, and then someone else. One of them is a broker. And so the broker kind of talks through like, what is relevant when you're going to sell a business. And when he explains who that person is, he actually explains them from a real estate standpoint. And he says, okay, well, you just think about a house. You go and sell a house. If you want to sell it to the market, you contact your local realtor. They'll stick a sign in the yard, and they go through that process. He says you take the same thing, but you replace the house for a business, and you have that same expertise, and they'll essentially stick a sign in the right spot and kind of offer your business for sale. As he kind of talks through that and really kind of going through like, planning and how he talks through investing, does this almost give you guys, different thoughts on if you're starting new businesses or even your current businesses, long term, how your exit strategies may be? Does it kind of change that or almost open up those ideas? And what did you think of that? Analogy? Did it kind of help explain that?
Well, it's interesting because I think, and let me know what you guys have thought, but like if you were raised to always, start a business to sell the business and to get it up to that point so you can make, the millions on the sellout. But it was interesting because he also made the objection to that of don't sell it, live off the profits, make the money, sit back and enjoy what you've done. Because a lot of people, your first thought is, I'm going to sell the business to go start another business. So you're going to sell your successful business that's making you money, that's making you enjoy your life so that you can go do it again. And it's like, you don't have to do that. And I think that's a different mindset than, what I was raised on. You start a business, you sell the business, you start a business, you sell the business, and you make your millions that way. But I think that was interesting to see that it's okay to not sell your business and to keep it and enjoy it. And all the hard work that you did to get it to where it's at.
Right.
I think he talks about in that same vein about how, once you learn the hows of the machine, how to build and whatever, then it's just like, then you just start plowing through and just building businesses. You know what I mean? That's the hard part. It's, you don't want to, like you said, if you build, you sell, then you got to build again. So it's just easier to just build and just line them up.
Right.
So I'm kind of going back, I think, to chapter 38 or 39, where he was talking about savers over wealth builders.
Right.
And he did the two comparisons of the two people, and by the time they got to retirement, they were both comfortable, but one was substantially more comfortable because she took her $1 million property or something and bought an $8 million property, and all of a sudden the revenue coming in was $300,000 a year. And so, like, to Natalie's point, I think it's good to know what your end result needs to be, because if you don't want to sell your business and you do have that future pacing and the projections to know where it's going to be, you have the ability to say, okay, this has got me where I need to go. now I know how to plan how to get there. So you've evaluated all of that. And then if something happens where you do need more income, maybe that's the time you go in and you sell that business and take your $8 million property and turn it into a $16 million property. Yeah, the debt's bigger, but the net that comes in every month is also bigger. And so I think knowing those numbers and knowing what strategy you're wanting to use and what those objectives are help you to know when is the right time to sell, when is the right time to buy, and what moves to make.
Right.
That
Right.
to me, that was so like eye-opening.
Right. Because I think I remember, so during that, he also talks about, certain times of the year, the market may like other businesses, so yeah, I think that's so part of that chapter as well. So I actually wanted to transition to this. He talks about self-confidence and he talks about faith. And he talks about it a lot. And I think it's one of his friends, Frank, I'm sorry, it's Frank that he's kind of talking about some of his experiences with. And so I don't know if you guys saw this, and I don't know if you can see it, but can you see it at all? Or is it just
Pull
pixelated?
back a
What
hair.
you're showing us, it says draw a diagram.
Draw a diagram.
Reality.
Yeah,
Now
so
we
the
get
first word is self-confidence, then you have reality, and then you have faith. And so it's just like this has been like the first time I didn't pick up on this because I didn't actually see that and I didn't really like put that together. But it's like, just so your self-confidence takes you so far. And he even talks about, I wrote down a note, self-confidence equals sales, where he talks about getting into sales. The ones that don't do as well are generally, it's has a lot to do with self-confidence. But then when you go further than that, when we talk about creating a vision and creating a mission, it's like a lot of that is so far beyond reality because it's not real yet. And so it's like, the self-confidence essentially gets you the sales, but then I guess past reality, it's fake. Oh, what's up? We have a visitor.
Say hi.
Hi.
Do you like the book that we're reading?
Yeah.
Is it pretty cool?
Yeah.
It's got Choo Choo Train in it, right? Sorry, excuse me.
No, you're good. You're good. But so do you guys relate to, and I'm sure I know this answer, you guys relate to the self-confidence equals sales? And then when I say, okay, well, past reality, it's really the more faith you show in your vision that's going to kind of get people to kind of gravitate toward it.
I think people that don't have a lot of self-confidence, takes a lot more work for them to sell something than people that are very confident. It comes very easy than to sell something.
Right.
That's
right.
like that's a formula to build a real estate team or a real estate company.
Mm-hmm.
Confidence, sales, faith, vision.
Well, when you're confident, so are the people that you're trying to get to follow you. When you're up there, if you know a script, you're confident in that script. You can say that script and it doesn't sound like a script or it doesn't sound salesy. When you don't know it, you stumble over your words, you mumble, people know that you don't know it, and then they don't see that confidence in it. And so I think, self-confidence is for sure number one most important thing out there if you're going to grow a business, because you got to be confident you can work with your consumer no matter what that looks like.
Right. Have you guys heard the term or the phrase how to pick up the check after lunch? I think that was one of the quotes from the book. I had never heard it before. I mean, it's kind of cool, but that's where he was talking about essentially he would have people that would go pitch their ideas to, and he talks about the sources of money, friends and family, angels and angel groups, private investors, public investors. And he said a lot of the times the biggest challenge is, the investor doesn't know how to go pick up the check much. Like they'll get them really excited, they'll get everybody on board with them, but then they just don't know how to close the deal. Which is where he really kind of starts talking about self-confidence directly relates to sales. But I feel like you know, it's good that you guys, obviously you guys are kind of, you know, understand it as well. But I think, you know, for me, as I was kind of getting into, you know, being a business owner, that was probably my biggest struggle, was just, you know, people would be willing to pay. I just didn't know how to pick up the pay, you know. I don't know if you guys had like come across that phrase or not, but it was definitely new to me. But that's really all I wrote down about, you know, well, I had a couple of more things. So he talks about PPMs, private placement memos, venture capitalists, investment bankers, and mezzanine funding. I haven't looked that one up. I'm going to go look that up. Has anybody heard of any of those, and are they familiar with those?
Some of them. I don't know what mezzanine funding is.
Okay. Yeah, me neither. I'm gonna look that one up. The investment bankers, I knew what they were. He put it selling to the public, basically. Well, once your business is ready to be sold to the public, you're gonna search out an investment banker, which is fantastic because once I'm ready for that, I already know who I'm looking for. Venture capitalists, I see that a lot in IT, in my work. You can get ones that suck. I don't know if you guys know this, but like they'll some of them are known for coming in and draining the funds out of the company because it came to them already with a good business model, and they just use the funds for other ventures. So if you ever get into that, look out for that. But that really brings me to the end of the reading this week. Anything else you guys want to bring up, or any questions or thoughts?
Yes, can you please open my brain, dump all that in, and make it make sense?
Yeah, I'm your business partner. Don't worry about it.
So we're gonna finish this bad boy off next week, right?
Yes. So the assignment is chapter 41 to the conclusion, end of the conclusion. So that's actually is less than 2 hours. So that'll be pretty easy to knock out.
And is the conclusion, is it, how many chapters is there? Is it just 41? 42 chapters? It looks like
Let me see.
the conclusion is about 45 minutes.
Yeah, 41 is only 25 minutes.
Yeah, 41, 42, and then the conclusion.
Yeah, I'm in the conclusion right now.
I was just saying that yeah, it looks like maybe like an hour and a half left.
Right.
Yeah, the conclusion is a good summary of the whole book and
Sweet.
And kind of how to go forward. And
sweet.
My
Now, just to who did I do the last book?
You did the book before. Well, it was the gap in the gain.
So who wants to take the next book, Steve or Natalie?
I think Natalie should take it.
Fair enough. So if you don't mind, make sure you have a book picked out for next week. And that's all, just so we know what to get, so that after next week we can start reading.
Sounds good.
Natalie, I'm gonna forward you that email. And I'm actually gonna include all you guys, and I'll put all the chapters on there.
Okay. And then so I mean, a lot of it sucks having the Audible version, because I feel like you're missing out on a lot of the visuals like that you're getting to see while you actually read the book. Where did you find that B model?
Oh, the BI model?
Yeah.
Oh, so the PDF I actually found like on their website.
I don't know if anything was included with our Audible.
No.
So
no,
a lot
I'm
of
not
these
sure.
self-help books, Natalie, if you will go to their website, you usually can find all of the diagrams and pictures and whatever.
Okay.
Like when I was reading The One Thing, I read it on my phone, but then I went to the One Thing website and pulled off the different diagrams or whatever that was on there.
Okay, good. I'll have to do that.
Yeah.
And I do think we should have a game night soon.
Yes. I am down.
Yeah, maybe I'll be able to understand those formulas. Minus the profit from the sales, from the loss, from the intake, from the outtake, from the what the fuck. David!
LOL.
Here, motherfucker.
Exactly. So you have an accountant on your team.
Exactly. I mean, I figure between Dave and Craig and Angela, my CPA, I'm probably okay, but I'm not, that is not my lane at all.
I'm a high C at heart, but I can't be. I have to turn that off so I can prospect and try and spend too much time as a C. We don't eat.
Yes, correct.
Yep, it takes a lot more work.
Cool.
I just sent that email out. So
Perfect. Well, we will
Thank
see you
you.
guys next week. Same time, same place.
Sounds
Sounds
good.
good.
Bye,
Bye,
guys.
y'all.